Hi dear traders, today is Friday, December 24th and I'm ready to share my regular market review prepared for InstaForex. Today the Catholic world is celebrating the great holiday. American exchange floors are closed for Christmas. European markets closed earlier than usual. The currency market is thin today. People in Russia are discussing the press conference of President Putin, who told journalists that Russia had won the battle with the coronavirus and that the domestic economy suffered the least from the COVID aftermath among other countries. What's new in the world? Canada is expanding its oil output despite the global trend in favor of green energy. The crypto market will be subject to the broad-based regulation in the US. The US senator who owns digital tokens is pushing ahead with this legislation. Crypto investors hope that the new bill will not be a disaster for their digital holdings and the markets. The US stock market is gaining ground because the new Omicron variant is not as safe as the previous Delta variants. Besides, the US has green-lighted new medicine by Merck for the COVID treatment. Let me remind you that the medicine by Pfizer is already available. Let's open a trading platform and discuss gold. The metal is extending its growth within a clear three-way structure that was triggered by the Fed's policy announcements and Powell's press conference. So I recommended buying this trading instrument from a retracement until the high of 1,815 is updated. The ongoing trend is simple and easy to understand. 60-70 pips are left before profit taking. I hope you have entered the market between 61% and 50% Fibonacci levels. Other previous metals like silver, platinum and palladium are also growing. I'm especially pleased about palladium that skillfully tested the level of 1,500 and climbed notably. This instrument has a clear-cut bullish outlook. It is following the overall uptrend, unlike platinum that used to trade under selling pressure for a while. The euro-dollar pair is also rising today despite a shorter trading day. The day before yesterday, the impulse pushed the pair both support and resistance. The price was tested upwards yesterday. Those who are trading with tight stop orders were disappointed yesterday. Their stop losses were triggered by a downward move, and if you buy immediately after an impulse, then you set a stop loss below the impulse. The day before yesterday and yesterday, Americans were buying the currency pair, so they bought it before this holiday. The price missed the level of 1.1380 that I have been waiting for a few recent weeks. I'm trying to enter the market with long position with the target of 1.1380. I wish it happened this year. All in all, I expect growth in and the breakout of 1.1380. Then I suppose the pair drop steadily. The market is highly volatile around Christmas and New Year's Eve. If you look up the history of the euro-dollar pair during these holidays, it's very funny. Ahead of the new year, the pair is trading still, but on the first trading week of the new year, bang! The pair makes sharp swings up and down. Sometimes a rally occurs before the new year. Next week, the market will be open for 4.5 days. The pound sterling is over here. It has made an amazing rally of 2,500 pips. It broke both support and resistance. A lot of traders are likely to open short positions on the pound-dollar pair. Apparently, they will see their stop losses triggered. These days, the pair has had a large bullish engulfing. The pound is poised to leave good targets. If you want to hunt for this pair, enter the market before these targets are hit. I told you about my ambitious plan that shocked lots of traders. I expect an extremely high target. However, when the sterling has jumped to 2,500 pips, this plan seems not so crazy. The level of 1.44 looks rather realistic. Certainly, I admit that the pound-dollar pair might get trapped sideways. I mean, this trading instrument can suggest huge opportunities. The dollar-yen pair is growing at a rapid pace. It is unwilling to follow my three-wave scenario. Earlier, I recommended selling the pair at about 50% Fibonacci level at the time of the Fed's policy announcements. The pair fell, but later the market resumed buying the pair. Now I'm trying to open short positions. Currently, the price is at a 38% Fibonacci level. When the pair declined to 23% Fibonacci level, I guess we should exit the market. My ideas for both the euro-dollar pair and the dollar-yen pair are based on the weakness of the greenback. Personally, I'm keeping long positions on gold and long positions on the euro-dollar pair. I'm opening small batches on the dollar-yen pair, and it's not a wise decision to bet against the US dollar in all your trading instruments. I reckon I might get a Christmas gift as the three-wave structure for the dollar-yen pair. Perhaps my gift will be a stop loss. To finish my video, let me remind you that Christmas wonders might happen today. If the market will gyrate amid low liquidity, analysts will come up with the following comments. Large transactions were executed amid low liquidity. I mean that you should be very cautious today. That's all for today. Merry Christmas to you. Bye bye.